So what happens when you're a yoga teacher with a successful nationwide yoga business and you don't file any business tax returns for your business, you don't file any personal tax returns for your business, you don't pay any taxes to the IRS for years? What happens then? Well, you can either go to trial or you can plead guilty to tax evasion, like Greg Gumicio did, for failing to pay any income tax from his business income or file tax returns for yoga to the people. And you may end up having to pay restitution to the IRS of, a little over $2.5 million plus face up to 5 years in federal prison. Of course, we don't know if he's going to get any prison time yet because he just pleaded guilty. We know that the restitution amount was part of the plea agreement. The sentence will be determined by the judge in the case. But so I thought I'd dig into this case here. What did these people do? What did he plead guilty to? And so I was able to find basically the complaint against not just Greg, but a couple of his lieutenants as well. And I believe this individual here, Haven, was his lover. Greg was the CEO of Yoga to the People. Michael Anderson, I believe, was CFO. Haven, I believe, was Chief Communications Officer. And they all had some shady stuff going on. So this is basically the complaint. This is what the special agent, basically the criminal investigator, said. Basically the result of his investigation that is included with the the complaint when it was filed. So, all right, we got through. So I'm just going to go through this. I'm not going to read everything. I highlighted some key interesting points here. That's either just flat out interesting, like all the places they traveled to, how Greg, I spent hundreds of thousands of dollars on airline tickets. And anyway, there's some crazy stuff, but also just kind of the depth of the scheme here that they performed in order to not pay taxes. And what's especially crazy to me is that they didn't file any tax returns, right? It's not like they were cheating on their tax returns. It's they didn't file. They thought that they were so good and they would never be caught because their business was almost entirely cash based, cash based, as we'll see. They thought they wouldn't get caught, but they did. So here's kind of a summary of all the things they did. So they used business accounts to pay personal expenses. Okay, they used nominees. That's basically other entities to disguise their connection to various entities, which in fact were part of the YTTP enterprise. Okay, they accepted Yoga Sutra's payment in cash, and they paid their employees in cash without providing any 1099s, W-2s, whatever. I guess for employees it'd be W-2s, without providing required tax forms to the vast majority of employees. Discouraging a nominee owner from accepting payments with a credit card. They wanted to be all cash, right? They were trying to eliminate a paper trail. Credit cards create a paper trail. They wanted to be all cash to hide their income from the government. And of course, failing to file their tax returns for all these tax years. Wow, 13 through 20? That's like 8 years there, right? Failing to pay income tax on their taxable income, upon which taxable income, as each defendant knew, right? They knew that what they were doing was wrong. There is a substantial amount of tax due and owing to the United States of America. Okay, so this special agent looked at, the typical written evidence, text messages and emails. And this is interesting. They stored and concealed YTTP proceeds in the CEO's apartment in New York, New York. For example, on or about January 14, 2014, Gumicio that's the CEO, sent a text message to a Yoga to the People employee instructing the employee to deposit $3,800 of guitar cash, which referred to funds collected from yoga classes, which were stored in a guitar case in Gumicio's apartment in New York, New York, into a YTT bank account, right? So sometimes they would use bank accounts, but other times they're just storing cash. And a lot of it was stored in this dude's apartment, apparently some in a guitar case. Cash payroll, not legit. They mentioned that one of the defendants filed an extension of time to file an income tax return for a tax year. That's kind of evidence that the taxpayer knew that they had a filing requirement, right? They just kind of throw that in there. They used a spreadsheet to basically calculate what they need to pay their employees. basic, and their employees are basically all the yoga teachers. This spreadsheet included a list of yoga teachers, the number of yoga classes each had taught that month, and the respective amounts that they were each due in their envelope. A reference to envelopes used to convey cash payments. They didn't pay with a paper check. They didn't pay with direct deposit. They paid with cash, right? Everything was cash in an attempt to conceal what they're doing from the government. Okay, and here's kind of a list of all these years here that they're going after. The special agent who wrote this was investigating these folks for approximately 2 years, right? This stuff takes time. This document here is a result of his personal participation in this investigation, examination reports, records, email, text messages, bank records, documents, and photographs, conversations with others, both former Yoga to the People personnel and other law enforcement officers, right? So these things take time to really piece together all this information, then get it ready for something that the government would believe has a good chance of conviction. So this business had approximately 20 yoga studios. From 2010 to 2020, YTT and its affiliates generated gross receipts of more than $20 million. So I guess what? That's an average of almost $2 million a year. Yet Yoga to the People never filed a corporate tax return with the IRS. That's just crazy. Crazy. Right. Gumisio was the CEO. Anderson was the CFO. Solomon, Chief Communications Officer, and the Director of Education for the teacher training program. And they're all owners, right? They all have a stake in the business. It's not just, they're paid some quote unquote salary or something. They all have an ownership aspect in the business. They each received a large volume of income from Yoga to the People, yet none of them filed a tax return. And here's kind of a gotcha as well. During this period, when they had this business and they didn't file tax returns, they all separately represented their annual income to be six figures to third parties not associated with the government, right? For example, we'll see, and we'll see this later. Anderson represented his income in order to as some high amount in order to refinance his house, right? So they know they're making money, and that they're providing figures to other parties that they're making money. Oh, but they're not reporting the income they earn to the IRS. And later in this, you'll see the CEO needed like a tax return for some real estate application, and he had the CFO like prepare this phony tax return for him. We'll get to that. It's pretty crazy, right? Extravagant lifestyles. We're going to talk about that. All the stuff they spent the money on. Okay, now it's going back to Yoga to the People, claimed to be built on the idea that yoga should be affordable and accessible. No ego, no glorified teachers, no pedestals. Yoga to the People, all bodies rise. Love it, but also kind of hate it. Now that we know what's kind of going on here. And so this next section here, I didn't really make any highlights. It's basically describing what they did at Yoga to the People, but at a high level, we already kind of know their roles. So we can kind of skip under that. Right, so under the leadership of the CEO, this Greg Gumuscio, the defendant, YTTP established a business model designed to generate a large volume of cash to evade the assessment and payment of federal income taxes. How did they collect the cash, right? Well, they used tissue boxes, believe it or not. So YTTP classes were crowded. Teachers passed around tissue boxes and collected cash from students. By the end of the day, teachers might have collected approximately 10 to 12 tissue boxes filled with cash. Okay, so you go, and I kind of get it with like a yoga studio. Like it feels right with a yoga studio. Okay, this is cash. We're going to pass around the tissue box. It feels kind of, namaste, woo-woo, right? As opposed to like a credit card, busting out some plastic. Feels a little bit more, stuffy. So I guess I wouldn't, if I was going to this yoga studio, I probably wouldn't question it. As a tax person, my radar might go off a little bit, but that's very interesting how they did that. So they generally paid its employees in cash and off the books. So, and there's some evidence here. In November 2013 text message, a former YTTP Yoga to the People employee asked Gumiscio, so should all salaries be cash? Gumiscio replied, yep, except yours, unless you want to deposit and write checks, but don't think it's a good idea. All right, here's the spreadsheet thing. I think they mentioned it before, right? They didn't really have any official payroll process. No direct deposit. Basically, It looks like Haven Solomon, one of the defendants, kept track of how many classes each yoga teacher taught each month, and then they were given an envelope with cash for their payment. YTTP generally did not provide tax returns to personnel. YTTP teachers did not receive W-2s or 1099s. So where was this cash located? Okay. So it was generally transported from the studios to the CEO's apartment on St. Mark's Place in New York, New York. For some of the cash, the location was a yoga house, which is a name for a residence where some of the teachers lived. And some of the employees said they would have these stacking parties where cash would be removed from envelopes, flattened, organized by dollar amount, and counted. Anywhere from 3 to 10 people at a stacking party. The CEO is usually involved, either in person or providing some oversight via text message. And here's the guitar case again. In various instances, the amount reported to be in his guitar case exceeded $20,000 or even $30,000. That employee serving as director of stacking on a given night would make a record somewhere of how much money was collected, but no one else was supposed to know how much money came in. Okay. Right. And the CEO maximizes unreported income by manipulating subordinates into providing a lot of free labor, teaching unpaid classes, stacking cash, cleaning yoga studios, depositing cash into bank accounts, etc. And there's another component here I understand as a tax person and as a business owner, which is in addition to stealing people's time, right, through convincing, his workers to do a lot of free labor. I don't know if that means like off the clock or something, but he's also, in a sense, stealing from his employees the payroll taxes that a business typically has to pay for its employees, right? Social Security. So with your federal income tax, or if you're an employee, that federal income tax comes out of your paycheck, right? That state income tax withholding comes out of your paycheck. Your company's not covering that for you. But the Social Security and Medicare tax, which is a pretty big bite, right? It's not a small portion. It's like 15.3%. And yes, the Social Security piece is capped at a certain amount that changes annually, and Medicare is, essentially uncapped. But an employee pays half of that, and their employer pays the other half, right? So that's kind of something here. I don't think they really mentioned that in this, but that's something to kind of note. Okay, so, right. The CEO didn't file any tax returns, didn't file any 941, there's no payroll tax. His personal bank account received payments by check from various YTT business accounts. For the period from only 2015 through 2020, his personal bank account received deposits in total of at least 1.6 million, almost 1.7 million. And they kind of do some calculations here of, the total amount and what the tax due would be on that if he had reported it correctly. Here's, I believe I read that this individual and the CEO were in a relationship, but kind of the same thing, right? She didn't file her taxes, and they say the same thing about the CFO. I'm not going to go into like detail about this. It's kind of just the same thing, right? They got money from the business, they didn't report it. Okay, now this is kind of an interesting, fun part here. So here's where they're going through. All these folks had a large volume of income and associated spending during the years in question, right? They were clearly making money, okay? Because this dude spent $270,000 on travel with United Airlines, $76,000 in hotels, $39,000 at restaurants and fine dining, $30,000 looks like SubHub, like tickets and stuff, $31,000 at Country Club, Amazon, Apple, HealthSun, and Neiman Marcus, and paid approximately $158,000 in personal credit card bills from YTTP business bank accounts. Had season tickets for the Denver Broncos totaling $40,000. Traveled to all these places: Aruba, Bolivia, France, Hungary, Israel, Japan, Jordan, Mexico, the Philippines, Thailand, Taiwan, Turkey, and Turks and Caicos. I don't know if I said that right. I've never been there. And then here's where they're talking about representations about income and other documents, right? So in a real estate application for rental property, I don't know if this is like an apartment he wants to lease or a property he wants to buy, but he was saying he makes $18,000 a month, right? And sometimes you go in your bank and they want to like update your income information, and they just ask you, hey, how much do you make? And it pops up, I don't know, at least once a year for me, I feel like. He told the bank income was 105 grand, that one instance, then 205, then 220, right? Car financing company, bought a new car. He said his annual salary was $285,000 as the owner of YTTP Inc. Rental application listed his gross monthly income as 30K. Oh, and this is really fun. So the CEO needed a tax return. Okay, and so in February 2016, a real estate salesperson sent an email to Gomicio regarding a rental application for Greg's new unit in NYC on Fifth Avenue. So it looks like the CEO wanted to rent a new apartment or something. A real estate salesperson requested supporting documents, including, among other documents, the CPA letter and the past 2 years' tax returns. A few days later, Gomicio sent an email to Michael Anderson, right, the CFO of the company, who's also a defendant here, which contained a photograph of Social Security cards for Gomicio and his 3 children. Shortly thereafter, Anderson sent an email to Gomicio with an attachment entitled 1040 GG Draft 2.pdf. Anderson's email attached a purported draft Form 1040 for Gomicio and Haven Solomon, right, because I guess they were together. The defendant, which included the 4 Social Security numbers that Gomicio had recently sent Anderson. Anderson's email mentioned, among other things, that we need to talk about the prepare part and what I should use, right? Because you got to fill out who's the paid preparer here. Who prepared this return? Well, it's the dude's own CFO. Anderson's email also noted, regarding the CPA letter, I want to discuss with you as well. It has been hard for me to find any kind of sample letter. The preparer's name on the draft Form 1040 attached to Anderson's email is Michael Anderson. Anderson signed the purported Form 1040 and wrote a date of April 10, 2015, even though Gomicio did not appear to request this from him until in or around February 2016. In other words, Anderson appears to have originally backdated this form by nearly a year. The draft Form 1040 reported Gomicio's occupation as YTTP owner, reported Solomon's occupation as yoga instructor, and reported their total income as more than $510,000 and their total taxable income is more than $485,000. That's probably just the standard deduction is the difference there. This was the same fabricated tax return that Gomicio later sent to the management services company in or around November 2016. Anderson also sent Gomicio an email with the purported CPA letter in which Michael E. Anderson represented in the letterhead that he was a CPA in Calumet, Washington. Oh, man. My review of publicly available information reveals that the list of CPAs in Washington state does not include Michael E. Anderson. The IRS has no record of the Form 1040 sent by Anderson to Gomicio having been filed with the IRS. Accordingly, I believe that Gomicio, Anderson, and others not named as defendants herein worked together to prepare a false 1040 for tax year 2015 for Gomicio, which was sent to the management services company in or about November 2016. It's just great. All right, now here's kind of the stuff that the CFO did. More than 100 grand on airline charges. It looks like he traveled even more than the CEO. Japan, South Korea, Taiwan, Hawaii, Philippines, France, United Kingdom, Germany, Hungary, Switzerland, Portugal, Spain, Morocco, Sri Lanka, Maldives, Malaysia, Canada, Mexico, Ireland, Jordan, Vietnam, and Cambodia. And, same thing. Dude refinanced his mortgage and said he made 19 grand a month, right? Did some other stuff. And he fabricated some tax returns too. Right, to refinance his mortgage, right? State that his gross wages were $425,000 for tax year 2019, $400,000 for tax year 2018, right? Talks about federal income tax withheld. Oh my gosh. These are W-2s. These are fake W-2s, right? With his information and plus fake 1040. Wow, that is something else. All right, so Haven and she and the CEO were in a relationship, so I'm guessing that maybe some of those expenses that he ran benefited her as well. I don't know for sure, but it seems that I guess she personally paid $49,000 in horse-related fees for horse shows, a horse lease, horse boarding, and horse shows. Okay. Foreign travel as well, Aruba, France, Philippines, Israel, Jordan, Bolivia. And she did the same thing of, reporting, telling her bank that she made 150 grand, right? Point being, all these folks, they were making money from this business. They knew they were making money from this business. They knew that they should have filed tax returns and reported this income to the IRS and to New York State as well. Yet they did not do so. So, and obviously this case is a federal case. It's just about the federal taxes due. But yeah, so the CEO pled guilty, kind of going back to this. And what about the other two? it looks like their cases are going to go to trial, and that trial will begin in January 2025. So folks, I mean, if you think about this, right, if you kind of break this down, this was not a huge business, okay? It wasn't, it grossed 20 million over like 10 years or 11 years. So that's like, about $2 million a year gross, but then split amongst 3 people, right? You see what I'm saying? It seems that the CEO owned more than the rest, but let's just say they all own equal parts, right? So what's 200,000 divided by, or 2 million divided by 3, right? So what would that be? Maybe let's say 650 grand a year, a little more than that. So like the gross receipts per business owner was only about 650 grand, right? Yes, they have expenses against that, obviously, but if you're out there and you have a small business, don't think it's only these huge businesses doing tens of millions, hundreds of millions of dollars a year that the IRS looks at, and that gets the attention of criminal investigators, right? Yes, they're going to go after, there has to be some meat on the bone, right? Probably not going to go after, the everyday average Joe, making, 30 to 100, probably even, a W-2 wage earner who maybe didn't get enough taken out of their paycheck, right? Sure, granted. Okay, and they owe maybe a grand or two. Okay. So there's got to be some meat on the bone, but don't think that it has to be like a whole cow of meat. Somebody who's owing this massive, huge amount, has a huge household name business, making tens or hundreds of millions of dollars a year, right? It was, a relatively small business, 2 million a year gross. But still, hey, they were on the chopping block. CEO, he's got to pay back 2.5 million in restitution to the IRS. He might be headed to prison. The other 2, we don't know what's going to happen to them. They're going to go to trial. Yeah, folks, get right with the IRS. Okay. You don't want to be on the wrong end of the stick with them. If you haven't filed tax returns on your business income or your other income, right? Now is the time to have that, come to Jesus moment, get on the straight and narrow, get back in compliance with the IRS. And if you need help with this, how to kind of navigate this, you've fallen off the tracks, you want to get back on, because if you get back on the tracks, right, before they start coming after you, that's a much better position than if you're caught. Okay. So if you want a free consultation with Choice Tax Relief about this, because this is something we specialize in, right, helping folks who haven't filed in years get back on track, give us a call, 866-8000-TAX. That's 866-8000-829. Or visit our website, choicetaxrelief.com. Fill out the form on there, and we will reach out to you. I also have some other videos here on the left-hand side of the screen that are helpful to those of you who have gotten behind on your tax return filing and or payment obligations. Thanks so much for watching, everybody. Again, my name is Logan Alec, CPA. I'm with Choice Tax Relief. Thank you for watching. I'll see you in the next video. Bye-bye.